Good afternoon. Today I'm going to go through my Euro USD trade, which I entered on the 31st of March 2010 and exited on the 31st of March 2010. Now there's a number of questions asked to me in the live session. I'll try and answer them, all of these now going through the video as we go through the setup, the entry points and the exit points. Okay, starting off as per usual on the daily chart, you can see this is the Euro USD. We've been in this downward movement for the past couple of this past week. You can see we've found some nice support around this region here, around 133.80 region. As you can see, these two candles here with a belt holding candle engulfing the end of this fifth wave. Basically, if you follow Elliott wave, then this is the end of the fifth wave, and this is the start of the ABC correction. So not that you should be looking for long trades in this sort of situation. You're just looking for when the momentum is going to come back into the market. So you can see that the market's pushed down its final leg in the fifth wave. This strong belt holding candle here back up to the Fibonacci retracement, 23.6 retracement line from the monthly chart. That's that purple line there you can see. If I get my crosshair out, where's that? There we go. So yeah, that's the 23.6 retracement line from the big monthly move down we've seen last year. So if you go back out, you can fib that, and that's the 23.6. So that's quite a key level you should have on your charts. This candle has come back up to that. In fact, obviously found a decent area of resistance. What we're looking for now is basically the momentum to see where we're going to go next. So when we identify, when we're looking for momentum trades, we look at it on the 4-hour chart. Look for belt holding candles, look for morning stars, or look for lack of momentum in the form of dojis. All these candle patterns you should be aware of, and they'll indicate to you when the momentum is high and when it's low, basically. So when it's high, you want to be entering the markets, and that's when the easy money can be made. Okay, so like I said, this is the fifth wave down, so we're looking to see basically if this is the start of the ABC correction. Now, ABC correction, the A wave will go against the final fifth wave. In this case, it will mean that the market's going to move up either to the 21, this blue line here, which will act as dynamic resistance. As you can see, it's done yesterday. And then if it breaks that, the next area it's going to go is this area here. So this pink line, which is the 55. This is where price wants to be. This is the equilibrium. So this is where there are equal, on average, the equal number of buyers and sellers, and that's where the market really is happy, and that's where it wants to be. You can see there's a key Fibonacci line there at the 38.2 retracement. So that longer term in the next couple of days, then that's probably where we're looking to finish this A wave off and start the B wave. Okay, so if we go down into the 4-hour chart now, I can show you the exact entry and exit points of this trade, why I entered and why I exited, basically. Okay, so this is the long move down. I've Fibonacci studied that, as you can see there. That's the last swing, which is the fifth wave. This is the start of the A wave, as you can see here. Okay, so basically the key area that you want to be looking for is this, as you can see, this region here really. And in particular these three candles. So I'm not sure if you guys are familiar with three candle patterns, but this is a morning star formation. So you can see it's the market's found support here and here, and then it broke past it here but failed to close below it and then come back, and then strongly aggressively moved away from it like that. So you've almost got here's your morning star formation, but you've almost got an engulfing pattern as well with this final third candle you can see here. When this candle closes above the gold line, that's when you're pretty much certain. You've got a lot of indicators there that the price is actually going to go and either retest this high up here, which it has done, or continue on to retest this Fibonacci line up here. From your targets, from your Fibonacci targets. So yeah, at this point here, you really know that the market's going to move up. Okay, so moving on to actual entry points. So as soon as this candle formation, for it to be valid, as soon as it finishes, so as soon as this candle closes, this third candle here, which was around I think it was 8 o'clock in the morning. So it's 8 o'clock my time this morning on the 31st. That's exactly when you should be getting in. So as soon as that candle closes, you know, just jump on, and that's your exact entry point right there. Okay, so looking at this, you know, where's your stop losses and where's your price targets? Well, obviously this, you know, the reason why you've entered the trade is this, it's found support around this region here. So anywhere trading past this sort of region here is a bad sign. So, you know, your stop losses want to be around this sort of region around here. You know, keep them out of safe play. If the risk is too much for you, then don't take the trade on. Okay, so price targets. Where are we looking for this to go? Your primary target is this line here, so it's going to retest this high to see if it's you know, if it's going to continue on its A wave or whether it's going to start its B wave. And you can see that in the last half an hour that it's taken out this high, so we're probably still in the A wave, moving up. So yeah, that's you know, that's where your intermediate or primary target would be. I actually came out at 35.27. I entered at 34.58, I think it was, on the close of this candle. So if we go here, the close of it was 63. I think I got a slight pullback on the 5-minute chart as used that for an entry. Okay, now we're looking at the 5-minute Euro USD trade, just to identify exactly where I exited the trade. So you can see the 80 EMA, which is this line here, and the blue line here, which is the 21 EMA, is clearly in control throughout this whole move here. What you're looking for is basically either a failed attempt to put in a higher high, which is this region here, or a close below the blue line, which is the 21. So you're really looking, they're your indicators for this momentum based trade, and that's really what you're what you're looking for in order for you to exit this trade. I exited around 35.27, I think, around this region here, when it failed to take out this high. So you can see along this region here and here it was making higher highs, and then at this point here is the first point now where it's failed to make a higher high. So now it's either going to go sideways or return back down to the downside for a bit. So that's exactly why I've exited now around 35.27, which netted me about 70 pips, which is not bad for a day's work. Okay, as always, can you please comment and rate on the video, as it helps other people learn. Also, if you guys are interested in the live sessions, then please do get in contact. Either email me or get in contact with me on the forum or YouTube. Okay, cheers.